Welcome back. You're tuned into Bazaar Morning Call. Well, as promised, Welspun Corp, that's a stock on our radar, reported a solid showing in Q4. The EBITDA coming in at the highest we've seen in the last 5 quarters. They have also surpassed the guidance that is set out for the last couple of years, and they've given a healthy guidance going ahead on the EBITDA front. We have with us Mr. Vipul Mathur, the MD and CEO of Welspun Corp. Hi, Mr. Mathur. Congratulations first on a solid showing. And thanks a lot for coming down to detail your numbers.
Thank you, Nigel. Thank you very much for inviting.
Let's get a couple of aspects out of the way before we focus on your numbers. Over the weekend, we got news that President Trump now is talking about tariffs going up from 25% to 50%. Y'all have your manufacturing unit in the United States. So will this be an incremental positive? Will pipes as well come under this steel and aluminum that you're talking about?
So if you look at our order book, at this point in time, I just want to put some clarification. We have an order book of close to, let's say, 19,500 crore rupees.
Yeah.
In that order book, there is not a single ton or single value of an order which is going to get exported or getting imported into US, where it will be subject to tariff.
Okay.
So
you are absolutely secure from
I'm
that
absolutely
standpoint.
secured from a tariff perspective.
Yeah.
All what we are doing, we are producing there in America. We are buying the domestic steel, producing locally and supplying locally. So to that extent, we are completely insulated. One. Two, this tariff, if, as Mr. Trump is talking about, I think so it is going to be beneficial in the long term. And, we have also evaluated that, to be honest. And that is the reason we are seeing that in times to come, that is an economy where domestic protection will be, much higher. And that is the reason we have announced about a sort of an incremental capex in the US economy.
In the US. So just to understand, and you were explaining to us, in the break, that 30% of your revenue currently is coming from the US. If I talk about your total production, how much is production happening in the US? And the worry there is, I'm not sure how you're sourcing the raw material. Because if that steel has to be imported to make the pipes, then, will that not incrementally cost you more because the tariffs are now going to be increased? Or is there ample steel available locally in the US so it doesn't really impact you?
So a very, very large part of the steel is locally available there in the US. Very, very large part of it. I mean, there's a very minor portion of it, which you probably have to import from. So the impact of that is very, very minimalistic in nature. But, largely it is domestic steel.
Okay, all right. Just one more question with regard to the capex. You'll have a HFIW capex for a long time. You'll have a unit in the United States. But in the last 6 to 8 months, I've seen you're putting on some aggression. Now you'll have announced this LSAW pipe. And you'll have announced capacity addition as well. What was the trigger? President Trump putting in these tariffs, do you believe that the US is seeing a longer runway in terms of, setting up these pipes and these facilities? If you could give us some clarity on that front. And also the LSAW pipes, you're putting in close to around 1,000 crores, I think so. What is the revenue potential and margin out there?
So two things. Number one, as regards HFIW, that's more of a capacity enhancement, right? We were there in the HFIW business for a very long time.
Yes.
We are seeing that there's a shift which is happening into the market where the pipe requirements are going to get even more stringent and extreme.
Okay.
Our existing capability was unable to address that. So we thought of enhancing our capability. Let's say, we were not able to make 24-inch pipe. We were restricting up to 20-inch pipe. The way the liquid lines are now going to, a liquid network is going to get created in the US, the distribution network, they will require a lot of 24-inch pipeline. We are seeing a lot of business coming up in times to come for hydrogen and carbon capture, and they will require very heavy wall thick pipe. So our existing capability was unable to address that.
Okay.
So this investment, what we have done in the HFIW has to be seen more from a capability enhancement point of view. Okay. Coming back to the LSAW part, typically you are seeing US is positioning themselves as a net exporter, both for oil and for gas, and largely for gas. We are seeing a huge shift happening in terms of putting up new LNG terminals and all that stuff, right? And we are also seeing an incremental activity which is now going to happen in Gulf of Mexico. My apology, Gulf of America.
Gulf of America.
Gulf of America.
I have to be careful.
I have to be very careful. So we are seeing incremental capability or capacity going to be built up over a period of time. Now you link it with the tariff. Now, there is no import which is going to come in. Earlier what was happening, these, when you talk of LNG terminals and when you talk of Gulf of America offshore drilling, they required heavy wall thick pipes. And they were predominantly LSAW pipes.
Okay.
So a significant quantity of that was being serviced locally, but there was also a large quantity which was getting imported from there. And imports were coming primarily from Europe or from Southeast Asia because they have the quotas. Now, everything will go behind that. Now, all of that will get shut down. So there will be a space which will get available if someone is a local player. Today, as Welspun, we are the largest line pipe manufacturer. I have a 30% market share and it is increasing. There is no better company than Welspun to position themselves into the LSAW pipe. And that was a rationale for us to put a new investment in terms of LSAW pipe.
Got that. So you're looking to fill in that vacuum that was coming in from imports, and you're still seeing that there's a structural story that's playing out there. So that's why you're setting up this LSAW facility. A couple of numbers, sir. Revenue potential from this facility when it gets commissioned in the next 18 to 24 months, and what kind of EBITDA? You've told us in the past, US gives better margins. So if you could give us a rough number.
So let's say from a capex perspective, it's almost 1,000 crore rupees investment. From a timeline perspective, it is something like 15 to 18 months, but most likely towards 15 months. And in terms of top line, see, we expect to do close to, let's say, 150 to 200,000 tons of the market we want to capture.
Okay.
Right? And, top line is a multiple of what is the prevailing steel price and all that.
What is it right now?
So, let's say today's steel prices would be close to $1,400, $1,500 steel price, but the pipe price will be close to $2,000. Let's put it this way.
That's your spread, yeah.
So, the top line is getting determined out of that.
Yeah, okay.
But coming back to the EBITDA, the earnings part of it, I think so. This is a high remunerative market if you look at it, and it is fair to assume something around 12 to 15% of EBITDA on a is a safe assumption to have it. But we will have to see how things pan out. We are very optimistic about that particular market. We are seeing a huge growth for the next 5 to 7 years' time, right? And we are seeing a massive, oil and gas investment going to happen in that particular country. Despite all that what is being discussed around, we still feel we are very optimistic around it, and thus this investment.
At the back of an envelope calculation, it appears you're going to be putting 1,000 crores, and at current prices, if you take $2,000, per ton, and 150 to 200,000. Looks like you'll do close to 3,000 crores of revenue potential from this capex. Is it ballpark the right number?
That's a fair point to assume. That's a fair point to assume.
So the US business is really firing for you, and you're clearly in that sweet spot because of your manufacturing facilities there, that you're benefiting from the protectionist tendencies. That part is very well understood. Overall, I think for the year, you're guiding for 18% rise in EBITDA. So just throw some light also on the India business, because the revenue mix will change. It'll be more US, but there's a large India operation as well. So just tell us about what gives you the confidence of achieving, I think, Nigel, 2,200 crores, right, is what we're expecting for this year. So just walk us through, how you've...
So
and will you outbeat that? Because last 2 years you've been doing that.
You've been outbeating your own guidance, so yeah.
We'll come to that. So two factors to that. One is the healthy order book. If you look at it, it's a 19,000 plus crore rupees of a confirmed order book, what we have at this point in time. A large part of that order book comes out of our US at this point in time, right? So, the profitability is reasonably better than in comparison to the other geographies. That's one part of it. So we are confident that, there would be a uptake on the EBITDA numbers and the percentage as well. If I talk about the India business, our India business, has two components to that. One is the oil and gas component, other is the water component. Water component is steady state. It's, it's going on nicely. But the oil and gas component is also giving us a lot of benefits. Today we have plants which are almost booked for more than a year. The signature plants, the LSAW plants, what we are talking, where you get the highest margins, highest EBITDA. So they have a clear visibility of business for more than 1 year, and more than that, a clear visibility of another year. So I think these are the factors which are giving us the confidence, and that is the reason we have been able to put this guidance that we should be able to give you, we should be able to deliver a EBITDA of 2,200 crore rupees.
And you all calculate with the other income. The chart is telling you, will you outbeat what you put up? Last 2 years, we have that chart that you have outbeaten. Probability that you're being conservative at 2,200, or you like to stick to 2,200?
This is a project-based business. There are many variables which are out there and which are beyond your control. So, I will admit that we have to be conservative because there's many variables which you don't control that.
Yes.
And, how they will pan out on a quarter-on-quarter basis. And we are seeing that what are the changes which are happening. Yeah. So, we are very confident to deliver this. Okay. Outbeating, I'm sure that we'll talk about maybe after Q2.
One of the variables that the streets gets a little bit skittish on is the crude oil price movement. So can you clarify? At what price does some part of this order book become uncertain, or do you think that, that there's no uncertainty? Because in the past, we've seen some uncertainty when crude oil prices see a sharp dip. So you want to give us a level of crude or something that you would like?
It's a concern. Yeah. There's no doubt about it. See, we cannot ignore that, crude pricing is not a concern. It is definitely a concern. There's no doubt.
At what level you're comfortable though?
See, what we have seen in the past, Nile, that when it comes around $40, $45, that is where we have seen a sort of a slowdown which is happening, number one. Number two, we also have to see that, this business, when the E&P companies look at this business, they do not look at it on a short-term basis. They see a horizon of 5 to 7 years' time. Because when they roll out their capex plan, which is multi-billion dollars, they do it over 5 to 7 years' time, their planning part of it. They don't do it on a short-term basis that tomorrow it becomes 45 and tomorrow it becomes 50. They just can't do that. They can't do that. So their horizon is much lengthier.
But roughly you're saying $45. I mean, if crude crashes to as low as that, then it becomes a concern.
Then it becomes a serious concern. It becomes a serious concern.
Just quickly on the capex you're putting to work as well. I think it's almost 4,400 crores that you're putting to work. Just walk us through the debt levels right now. Where will debt peak out and what do you see ahead?
So typically, you see the capex is splitted over US and our Saudi investments, right? US, we have talked about 1,000 crore rupees of investment which is going to happen. And then, we have also upgrading this HFIW bill. The second investment which is happening in Saudi. So that is where almost 1,600, 1,700 crore rupees investment is happening. So these are the two large geographies where the investment seems to be happening. One of them would start coming on upstream in 27, right? And we would see the trickling of their cash flows, trickling income to FY27. And from the US, we'll start seeing trickling in FY something like 28. So if you see the trajectory, what we are building at this point in time, we have a confirmed order book of FY26. We have a clear visibility of FY27. Yeah. We are now putting about to next platform that the new geographies, which is the Saudi, will start trickling in FY27. And then by the time they will stabilize, we will have the US geography FY28 coming in.
What's the debt level now, debt equity?
So right now, we are a net cash company at this point in time. And despite, if you look at this year, we still have a net cash of 1,000 crore rupees, despite doing a capex of almost close to 900 crore rupees in this particular year. Moving forward also, I think so we are very clear that our net debt to EBITDA, we will be able to maintain less than 1. Currently, we are aiming, striving to be a net cash company, even in the 2 consecutive years where we are going to do the maximum capex.
Okay, all right. Final question before we let you go. The OPVC pipes, that's the big launch, Syntex and scaling up out there. If you could tell us for FY27, what kind of an EBITDA contribution can come in from this, the pipes division and the Syntex division, because that's where the ramp up and that's what the street is hopeful of an optional value coming out. And the other smaller part is the Welspun Specialty Steel. That's the other listed entity. Can you do a EBITDA of around 150 crores by FY28 on both these two? Because these are the optional value that comes out from it.
So let's say Syntex OPVC is going to be a game changer. We are very, very bullish on that, number one. It's a revolutionary product. It is going to which is coming to our stable. And we are very, very, focused on that. Right now, as we speak, we are about to start in Bhopal. We have 2 lines put up in Bhopal, and then we are moving to Raipur, and then we will move to South. So that's our plan, that we will eventually start with 6 lines over the next, let's say, 9 to 12 months or 15 months' time. And we see a huge traction coming in for that. I think so there's a lot of work yet to be done. But we are very, very confident that, we should be able to crack through. And given the situation, given that we are into a B2B space, we are dealing with the same customers, we understand this pipe market very well, we should be able to turn around that very fast. A little early to give in terms of EBITDA numbers and all that stuff. I think so as we ramp up, probably in next 1 or 2 quarters, we should be able to crystallize those numbers, that what is that going to be. But in terms of our confidence, in terms of rolling that OPVC out, and in terms of its acceptance into the market, we are very, very confident.
And the smaller one, Welspun Specialty, can you do 150 crores in the next 3 years? Currently, you're doing only 50 crores.
See, it's a great business to have. It's a very, very great business to have it, number one, right? It is now, earlier it has 2 components. It had a domestic component and it has an export component. We were a large exporter to Europe. European market seems to be slightly depressed at this point in time. So all what we are currently focusing is on the domestic market, and there's a huge upside and a huge potential out there. I think so, I don't want to put any numbers, but year-on-year basis, I think so we will see an incremental EBITDA coming up out there.
Okay. All right, Mr. Mathur, appreciate you joining in. You have seen various cycles of this business, some uncertain times as well. For the time being, the street is bullish on the prospects, but as you said, it has many variables. 2,200 crores is what you're going to be working with. You want to keep the books light as well. Look forward to chatting up with you.
This is the time for growth. I would say that in these uncertain times, you have to find an opportunity. So we are doing that, and we are very confident of that.
Fantastic. Good luck with your plans.
Thank you very much.
All right. Thanks a lot. Well, we've run out of time on this interview. For the